All right, welcome everyone to LeapMeet 77, August 2022 trade log review and technical analysis. We usually have separate meetings for the book, but this time around, since we were not able to conduct one last weekend, we will combine this two and try to get you guys as much information as possible. So let's start. Let me switch my focus. Okay, so let's start with here first. We are going to take a look at like overall picture for August and then go from there. So August started about right here, as you can see. So first few weeks is pretty much traded sideways. And then like around August, after August 9th, it took off, ran into resistance at it's a little bit of consolidation, run up, ran into resistance at 200-day SMA, middle of the month, and pretty much from that point on, it started moving lower. And by September 1st, we were back in the range again where it all started. So if you look at the previous zoom out again, so I always say this to people: when in doubt, zoom out. So because zooming out, not just trading, everything else, even in life, like if you have any problems or something, just like look at the bigger picture. It will guide you. It will tell you what to do. But the same principle applies to trading as well. Even when you're analyzing the results in TradeLog, right? We'll go over that in a little bit. But when you zoom out, this downtrend that pretty much started. So first wave of downtrend was here, which went from January all the way to March 15th, basically. Some bounces along the way, but that's when it ended. That's when this downtrending line ended and we got a trend break. Went up for about half a month, and then came wave two of downtrend, which went on, which you could consider that it went here. But if you connect the first two dots, then it was still below this trend line, and it worked out perfectly. And we saw another huge drop to the lows of about 250, 260, 365 in SPY. And then we saw consolidation, try to bounce again. And finally, in July, we saw the trend break. And then we saw this nice uptrend here. And then now begins the trend, wave three of downtrend. So that has been the pattern pretty much entire year. We see a huge downtrend with some bounces along the way, trend break, another huge downtrend, some bounces along the way. Consolidation finally happened in June, July, where market held the lows of 372, 373 multiple times. You could consider that as consolidation and market forming bottom so far. Because if you look at the previous one, like we never saw that type of consolidation before during this one or even this one. We did see some consolidation in this range between 400, 408 and about 418 for quite some time before this huge drop. And then we saw about June 16th all the way to July 20, like a month-long consolidation, trend break, pulling back now. So month of August was interesting because we saw some consolidation in the same range, as you can see. And I mentioned this during the technical analysis for the month, where I mentioned that we are in the same range again. So we exactly like this, we saw some consolidation, market tried to bounce, ran into resistance, pulled back again to the previous range where it bounced here or faced resistance here. This time around, it found the support, tried to bounce again this week. But month of August was interesting. Up and then pretty much the rest of the month it was down. And it was more challenging than usual, mainly because even like it ran into resistance here, but the range was great on SPY, but individual names were not that great. Like it would drop uh, pre-market a lot and then continue to drop and then find support and then like trade sideways for the rest of the day. So you pretty much get like about half an hour at the beginning of the day to take your trades. And then if you do try to take it for the rest of the day, usually you get stuck. There were exceptions, but that was the general themes for pretty much the entire month, where we saw volatility only for like maybe an hour, hour and a half, I would say, but that was about it. Also, in month of August, last 2 weeks, I was traveling, so it was a little bit hard for me to keep tabs on it because there was 12-hour time difference. So when it was pretty much that 8, 9 a.m. here, it was like 8, 9 p.m. over there. Market close was past midnight, so it was difficult. We see this online all the time, like laptop travel, trading lifestyles. In reality, though, it's impossible to do that, where you can just trade off of one laptop. It's hard. Not saying it's impossible, but it's hard unless you have like years and years and years of experience behind you. And I have that, and even still I find it very, very difficult to do so. A reliable internet, all these issues, people don't talk about it. They just like to post pictures with their laptop sitting on a beach trading. That's not how it works usually. It's a full-time job. Anyway, so that was the month of August. So let's take a quick look at TradeLog. As you can see, sideways, up, and then pull back. So first week was amazing. As you can see, we took about 25 trades in entire week, about 400% or 100% plus trades, only 2 losses. Overall, we nailed it. Every day we were taking 4, 5, 3, 4, 5 trades and great success rate. There's not much to say there. We follow the rules, we follow the trades. Tried something different in SPX here, which didn't work. But it's okay. I've been trying to trade SPY and SPX on the side. If you know me, you know that I don't randomly trade a name that I don't know anything about. So I've been trying to add SPX to my watch list and trying to trade it and get get good read on it. So you'll be seeing more of those trades later on. Tesla was the only trade that didn't fail, and as usual, I made a mistake and I didn't have stop loss in place, and you'll see this mistake being repeated a lot of times this month, and partially because I was traveling. So by the time I got to see the my position, I'm used to managing my position very, very actively. I don't step out and just have stop loss in place. What I do is I actively monitor it and do the stop losses when required. But in this case, no excuse. I made a mistake and didn't have stop loss and pretty much lost 100% of the position. Come week 2, where we saw it run up really nicely, as you can see in the chat here. This one right here from up to August 16. and that was it here, August 12, August 8 to August 12, another run up, and we nailed it pretty much. Especially with this Microsoft trade was a monster, 337%. Another one, Nvidia here, 111%. This Microsoft again went on to like almost 200% plus. We sold out. We sold it break even just because we didn't want to take too much risk on Friday. But again, we took about 22 trades in week 2 with only 2 losses, and it was fantastic, right? Like there was nothing to be said here. But yeah, pretty much 2 losses, all wins. Wins were quite a big, so this losses did not affect us as much. So 2 great weeks to start the month. What more can you ask, right? And then came week 3, which was still fantastic because up until like I believe weeks up until 816 or 817, it was going up. So, like I was told, tell you guys, like play in the direction of the trend. So, as you can see, because we were moving pretty much sideways and then started moving up, most of our trades were calls, like calls, like pretty much everything. Like that's week 2, even week 1, most of the trade, if not all, like exceptions here and here, but most of the trades were calls because that was the direction of the trend. Like if you try to bet against it, if you think that okay, it's up too much right now, and we need to now bet against it. Oh, and I see these people make this mistake all the time. Oh, it's up so much, it has to go down. No, it doesn't have to do anything. But what smart people do is they take trade against it near resistance level. If you really want to just play puts or think that something is overbought or up too much, do it near the resistance levels. That's how it works. And the same thing when market is falling, do it near the support level. That's how you have more chances of success rather than randomly buying stuff just because you think it's up too much or it's down too much. Anyway, so week 3, another great week. We pretty much nailed it entire week except on Friday, where we made a mistake of taking trades for the following week. If I'm being honest, I have not done that entire year this year. If you have been trading with us, you would know that we have been advising don't hold anything overnight. Especially don't hold anything over the weekend. In this market, it's pretty much like shooting yourself in the foot. And that's exactly what we did here. And I'll tell you the reason why we did it. So 819, as you can see, we were like right here, right? So 16, we ran into resistance, pull back a little bit at 17, 18, and then 19 right here. So the reasoning was that because it's near the support level from here, there's a chance that it will try to bounce and go towards the 200-day SMA and take another shot at it, right? That was pretty much my reasoning for entering those 2 trades. But like I said, shooting yourself in the feet because it failed miserably. Like both of those trades, like the next week when market opened, as you can see, it was already super down and it just never recovered from that point on. And by the time it tried to do it, it was pretty much useless because by that time, so Monday, Tuesday, Wednesday, and then Thursday. By the time it's Thursday, when you try to bounce it, the expiration day was the next day, and it just wasn't going to happen. The premiums tanked so much that there was no hope for it. So big mistake. We'll be avoiding this in the future, but let this be a lesson for you guys as well. So now that I know I made this mistake, I won't be repeating that mistake again, right? So that's why these trade logs are so important, because that's how you learn from your mistakes. If you don't know, if you don't keep track of your mistakes, how are you going to correct it? Now I know, now it's on my trade log, now it goes on my rule list on top of my screen where I post pretty much everything and be like, okay, this is what I need to do. So now I won't be repeating that mistake again, especially in this market. With market turns, then we can revisit it later, but in this market I'm not going to do it ever again. But I made this mistake and I paid for it. 200% my negative 100% trade. 22, another lesson here is that I was actually traveling. So this trade was we entered in it, small position. I kept it small because of that reason, and super cheap. Um, that was week 4 right here, like around here. So there were two things that could have played out on Monday, 29th. What was it 29th? No, 22nd. Sorry, my bad. 22nd was right here. So right here, there were two things. Remember, we were hoping for a bounce here. That's why we entered in this two trades. And the similar logic, I was like, okay, there is a chance that it would bounce, but I'm not going to risk too much. So when I did my analysis for that week, I was certain that I'm not going to trade as much as I did before. We were going to keep it very tight and take smaller position, not risk too much, etc. And that was why we only took one trade. And then on Tuesday, I was back. I had my setup going, still jet lag and everything, but the whole point I'm trying to make here is that you need to adjust to your surrounding. Because I was traveling, because I knew my setup is not reliable, my internet is not reliable, etc., etc., etc. And on top of all that, market was bad. So I was like, okay, I'm not going to trade as much. So as you can see, we go from where we started, like 24, 25, 22 position. By the time we reached week 4, it was down to 9 position an entire week, and out of those 9, 2 were losses. We Good thing is that we did follow stop loss here as well, and this Tesla trade was just bad, and because be honest, this was pre-split. As you can see, 950 made a mistake that should not have played it, mainly because it was going into split, and I should have been more mindful of it. It didn't, and after split, it just tanked. There was no chance of recovery whatsoever, so that also went to zero. Come week 5, um, I was pretty much absent, but Admin H did great job creating Tesla both ways and pretty much nailed it every single time. Great trades, and when he wasn't available, like, close it. If you're not able to manage it, just close it, go away. So that way, you don't have to stress about your own position, especially when it's expensive, like $4.40 to $2.30. Don't bother. Just get out. You can always revisit when you're back done actively managing it. But we try. Good start. The only losing trade was crowd. So all in all, we took about 80 trades in month of August, 71 wins, 9 losses, 88% winning rate, 11% losses, 700 plus wins in month of August. Not the best, but not the worst performance here. I do remember someone mentioning when we were in week 4 that this has been, or some, yeah, week 4, with all this 4 losses mounting by the end of the week. Someone is like, this is the worst week that trader ever had. And that brings me to my point that I was trying to make it earlier. When in doubt, zoom out. Yeah, we got 3 back-to-back losses and even the fourth one, and all of them were quite big. But when you zoom out, what do you see? You see we had 3 great weeks ahead of that bad week, right? We had amazing wins week after week for 3 straight weeks before we ran into that slump with the market and all the other factors combined that I already mentioned. But usually what people do is people focus more on the negatives and more focus and I'm guilty of that myself, right? It's just a human nature that you just want to focus more on the negatives rather than positives. And that's why I say when in doubt, zoom out. Because if I focus on just this last 2 weeks and be like, all right, I did miserable. Like that's very, very bad. And that's not the performance of someone with the 10 year of experience, 10 plus years of experience. That's not the performance I should be following. Why am I following this person? Like, why am I listening to him like tell me the trading secrets and whatnot, or teach me how to trade? That is not the performance of that person that I should be following or even thinking about following, right? Why am I paying this guy to learn trading? And he's saying he has 10 plus years of experience. Are you kidding me? This is like pretty much any other average trader. And that's what most people think. If I look at this, that's what I would think. But then when you zoom out or just scroll up in this case, bam, look at it. Like trade after trade, amazing trades, 100% wins, very minimum losses. Like this is 25 plus about 40 trades, 2 losses. Now that is something that is the performance of someone who has been trading 10 plus years. Or when you look at the bottom line numbers, like, okay, 88% win rate, that is the performance of someone who has been trading 10 plus years. But people don't see that. People don't focus on that. People focus on their recent memory. People don't remember what happened a month ago or what happened in first or second week of August. They will remember what happened in last week of August, and that's how they judge you. The point I'm trying to make here is that every time you have doubt about even your performance, and I tell this to people all the time, and I have people from our group come to me and like, hey, I'm struggling, like I'm breaking even, or I'm down this much, and I'm like, you're only looking at the negatives. You're down this much this month. How about this entire year? Or how about your trading journey? How far you have come? Like a year ago around this time, you probably would have blown up your account, and look at you right now, pretty much break even or down 5%, which you can recover easily. That's the improvement. You are much, much better trader than you were a month ago, and that is what's count. Don't zoom in so much that you lose the sight of bigger picture. Focus on the big picture. I don't have plans for next month or next 2 months or next 6 months. No, that's very, very granular. My plans for myself and my family is for next 3 years, next 5 years, next 10 years. Because when you zoom out, everything smooths out. And I'll tell you I'll show you a picture of it. Look at how SPY looks right now, right? Like very, very ugly chart. But when you zoom out all the way, let's just say weekly, and go, what do you see? you see this amazing trend and you see this amazing opportunity that you have pretty much captured if you started trading in 2011 or started trading in March 2022, this amazing trade you missed. So when you zoom out, you see this big picture, you see that small, the opportunities that are there in stock market. But if you focus on just this tiny bit here, then you're like, oh, there's nothing to do. Why am I in this market? It's always go down. Like there is no money to be made here. It's crazy market going up and down, but that's just this year. Think about 10 years and then you will see like, oh, that's what everybody's talking about. And that's why so many people invest in the stock market because of this chart, not because of this chart. And that is the point I'm trying to make here. Anyway, so that was the TradeLog analysis. Overall, if you have made roughly $700 position, then you would have made about $4,000 plus or minus, depending on your execution. But this number is pretty much based on this first or second exit, not the last or highest exit, because we want it to be realistic. If we count this exit, then this number would have been probably 10,000 plus easily. But this is more realistic. This is closer to the realistic number that you could have made if you follow the rules, if you took every single position, following the rules, and keeping the position size at 700. Anyway, so that was the TradeLog analysis for August, and let's jump into TradeLog. Technical analysis. Before we do that, do you guys have any questions? All right, if not, then let's get started. Let me just get some water real quick. Alrighty. So as I was saying, let's zoom in now for technical analysis, and we did a little bit of that. Wave 1 down, wave 2 down. So wave 1, 2, 3, 4, and this is wave 5th down. On this pullback, we held this 387 level and now trying to bounce. If we manage to get over 200 SMA this time around on this uptrend, first is this downtrending trend line is what we need to cross over. And then the next resistance will be at 426 area where the 200-day SMA is. 50-day SMA is still going up. 100-day SMA is still down, 200 is still down. So a lot of work needs to be done in this area. So what does that mean? It means a lot of unpredictability. It can go anywhere. It could fail at this trend line and go lower, or it could break this trend line and try to move up this week and somewhere around this trend line by end of the week, positioning itself to move over and finally break this year-long trend line. Possibility of that's happening is high now, because the more you try to break over, the higher the chances that you will. Also, this time around, the RSI is not as high as it was here. We are in the low, like in the mid range. So there is a possibility that we could see a bounce coming in to this week. But I would strongly advise you to be very, very careful and play off of levels. So the levels to watch for SPY is 408 here, 411, 415 is a huge one, and then 418 is another big one, because that's where this is the range. So we could see some choppiness once market moves over in that range. If it manages to get over 418, then there is a higher probability that we could see this trend line break going into next week. If it fails here on Monday, then there is a possibility that we can test lows of 387 again. Break below that, 372 is the possibility. 380 is the next support here, and then 372. Overall sentiment at the moment is bullish. So we will see how that plays out going into next week. But those are the levels I'm watching. QQQ, very similar, pulled back, bounce, reclaim 200-day, 50-day is moving higher, 100 and 200-day is moving lower, reclaim the 100-day SMA, closes a little over, like right over 50-day SMA. This trend line, recapture this uptrending trend line. The resistance is going to be here at about, I would say, 316 for it, going into next week. So if it manages to break over this, then we can see another attempt to move higher towards 334. RSI is good, not overbought, not oversold, so there is a possibility for it to move higher. But again, watch this trend line levels. The main level that you need to watch is 300 here. Break below 300, and there is a higher possibility that we can pull back towards 288. 296 could provide some support here, but I wouldn't count on it as much, especially if it breaks below this trend line. So be careful with that. Amazon, let's take a look at Amazon. Finally broke above this downtrending trend line on Friday. 50-day SMA strongly up, 100 days down, 200 days down, but we are finally over this downtrending trend line. So it is breaking higher. So I would not be surprised if we test 135 and then 138. So those are the two levels you need to watch on the upside. If it moves over that, 140, which is where it will meet with 200-day SMA resistance. Last time it did, it struggled to consolidate a little bit and then pulled back. Something similar could happen in the range of 138 to 141. So be careful there. But that is a higher probability right now of it happening. RSI is in check. So those are the levels I'm watching on the upside. On the downside, 130 is the main make or break level for Amazon. Break below that, 126 and 123 would be the next support on the downside, which is where it will meet with the 100-day SMA. Break below that, then it can get a little bit ugly. Let's see, Google. Remember how I told you guys this range, we established this range during last technical analysis, and look what's happening. Try to break it, failed, touch the lows again, and now it's bouncing. So we're just going to extend this range right here. And it could continue to chop in here. So it is trying to break over this trend line. If it does that, then it can easily move towards 114, which is where it will meet with 50-day and 100-day SMA resistance. Break over that, 115.25 will be the next resistance, and then 119. If it manages to get out of this range, then it can try at 130.23 again. Chances of that happening, not impossible, but still hard to say. This range it started like about May. So May, June, July, August, it's been in this range for about almost close to 4 months. So it's a very strong support and resistance range. And it likes to do that, as you can see here. And if you zoom out here. So history likes to repeat itself. So I would not be surprised if that happens. I would be looking to buy calls if it pulls back to 105 or even 104. I would be looking to open equity position in it if it could go back towards that range. I will be looking at puts around 119. Middle of the, as long as it's middle of the range, the levels I'll be looking at is 112, 112.50. This SMA levels, 115, and then 119. Those are the levels I'll be watching upside. On the downside, 109 and 106. So that's all you need to do. Just follow the levels, let it guide you, and take your trades. Shop, look how beautiful it is. Once you get to know a name, you can pretty much call it. If you remember last technical analysis, I said shop love this range. I will be looking to buy more, right? I did buy more here when it broke over 100-day SMA, but it failed very, very quickly. And then look where it's bouncing, right? It's bouncing right at that range again. 30 area, boom, started bouncing. Now it's at 50-day resistance area. And then the next resistance is right at the 100-day SMA. And then the high of the range, like around 40-ish, right? So 1, 2, 3, 4, 5, 6, and now 7 times it has bounced off of it. Though that's $7 to $10 trades that you could have taken. That's how you make money stress-free. But you can't know that if you are not following the name. That's why I have like about 15 names that I follow very, very closely. And so I know that this is how it's going to go before it happens. So amazing how it plays out. So now we're bouncing. It has failed in this range before, as you can see, and pull back to low of the range. So I would not be surprised if that happens. But if it starts to move higher than say 36, 37, then there is no harm in taking like 40 or 38 calls, and then I would look to see how it behaves here. This time, what was different than this time, if I ask you? This time, it was below the 100-day SMA when it tried to break over this range. If that happens this time, it will be over 100-day SMA, meaning 100-day SMA would not be providing any more resistance, but it will be providing support at this area. So there's a higher chance that if it tries to break over this range this time, then it will move higher. So keep that in mind. Am I looking at it from option perspective? Not really at the moment. We'll see how that plays out once it moves over this range, like get out of this range bound area. I usually don't. I like to take position in the middle of the range. So we'll see how that plays out. But equity side, very, very nice name at the moment. Apple pulled back, tried to bounce off of 100-day SMA, found strong support here. Now it's trying to move up. Very strong uptrend in 50-day. 200 days flattening out. So resistance going into next week will be at 158, 150, 160, and then 161 at the 200-day SMA resistance. Break over this, and then it can start to move higher, and it will form the trend. We'll have a trend line, and we can trade off of that trend line. Look how similar this chart is to what we saw for SPY, like downtrend, break of the trend, up, another downtrend, break of the trend line, huge uptrend. So that's what you need to look. So if I'm looking at here and trying to draw a trend line, this is the trend line I'll be watching. If it manages to get over this level, then I would not be surprised if it go back to 176 and even all-time high at 182. Is it going to happen in a week? No, it's not going to happen within a week. But that is the trend, and you can trade the trend, right? So just follow those levels. On the downside, 152 100-day support has been holding for entire week last week and even before that. So I would be counting on that level and SMA to provide more support, but break below that. The immediate support is again at 151. Break below that, then it can finally start to move lower. So watch those levels and play those levels. Not really. Netflix has been making some good moves. It's trading sideways now. Um, it's it's very tight in range, so hard to play. But I have added that name back on my watch list. So I'll be watching it and look for trades to come in that name. We'll see how that works out. Meta, again, another name that's in range bound. I will extend this to now here because that's the new range where it's been filling. So that is the new range. This is the secondary range. I would say this one that we had before is the primary range. The only time now I would be interested in Meta is if it breaks over this trend line. It's not exactly cheap enough for us to do the multiple equity trade, so we'll see. NVIDIA, it's so the unpredictability around semi names is very, very high right now. So I would probably avoid taking trades in NVIDIA. But that being said, if it manages to get over this 147, I would say, level, then I will be interested in it. Where I will enter in it immediately with 150 calls. So that is the level I'm watching on the upside. As long as it's below that, then I'm not really interested in it, not even on the put side, because NVIDIA is so volatile. You have to manage it very, 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 very actively. Crowd, another strong name, pulls back, goes out. It's so volatile. Another very, very volatile name. So you have to be careful with that. It tries to break over this range and then fail miserably the next 3 days, and then bounce up and then fail miserably. Like it's crazy. It's all over the place. Now it's again over all three SMAs. 195, 194 will be the level I will be watching on the upside. I would say 195 actually. Yeah, 195 would be the level I'll be watching on the upside. If it breaks over that, then 200 calls could work. Over 200 to 205. But if it manages to get over this 206, then it can really start to run. Keep an eye on it. Volatility is good if you know how to tame it. And crowd is one of the names that is very, very hard to tame. So just keep an eye on it. Aim for quick trades and see how that goes. Tesla, it's over all the SMAs right now, which is a good sign. The resistance on the upside now is at 303.50. If it manages to get over that, then it can run to 315, over 315, which is recent high. It can start to move towards 325 next. So watch those levels. It's not exactly cheap, and it is volatile. But that being said, it does give good opportunity. It has been running last 4 days on the upside. So just watch to take the trades off of levels. Yeah. So I'll be watching that 305 level very, very closely going into next week, or this 296 for the puts, which is where the 200-day SMA is. So watch those levels and take trades. Tesla hasn't been very nice to me lately, so I'm a little bit hesitant. There are other names that are very, very strong and very predictable. So that's where my focus is at the moment, but I will still keep an eye on Tesla. Microsoft got destroyed pretty much last 2 weeks, pulled back all the way from 294 to 255. That's almost a $40 drop. And finally, it's trying to bounce here. It is below all three SMAs, which shows weakness. So the first resistance for it is going to be at 268 this week, and then 270. So those are the two levels I'm watching on the upside. Um, so keep an eye on those. If it fails at those levels, then puts can start to work. On the downside, what I'm watching is 263 and then 260. Those are the main levels I'm watching on the downside. If it breaks below 260, I would be interested in getting into puts, because below that, the only somewhat support area or level is 258, and then it can go straight to 254. So those are the level I'm watching for Microsoft. Microsoft has potential to run big, as you can see here, a lot of time, like in 2-3 days range, it can make about like from 255 to 273, like $20 move. And if you manage to capture that, then you will make good money. So just keep an eye on it for the upside and downside play. Okta, not really interested at the moment. Cost, another one that is struggling right now, is just consolidating, so I'm not really too interested in it. But that being said, 540 could be a good entry point for cost on the upside. ENG, it's breaking out pretty much over this high of 1700. It ran into resistance at 1738. We'll have to do a little bit more analysis in it, but if it manages to get over 740, 1740, then it can start to move towards 1784. I would be looking to get in it on any pullback possible, but we'll see how that plays out. I do need to analyze the option chain for it. That is why I'm not super confident giving you guys levels at the moment, because I don't want to just do it blindly. But yeah, so those are the levels that I'm watching in cost. And that's it. Those are the names I wanted to talk to you guys about. Those are the names that we usually trade. If there is any other name outside of the one that we talked about that you're interested in, feel free to drop it in the Trooper stock and just request a chart for it. I will be more than happy to provide that levels for those names. And if you have got any questions, now is the time to ask. If you guys don't have any question, we'll go ahead and end the webinar here. All right. If you guys don't have any question, we will go ahead and end the webinar here. Thank you again, everyone, for joining on this fine Sunday. We really appreciate you guys taking time out of your busy schedule, and I will see you tomorrow. Have a great day, everyone.